Hello dear traders, last week was rather turbulent for the stock market. The main stock indices incurred significant losses. One of the reasons for the decline was the escalation of conflict between Russia and Ukraine. However, at that time the equity market was already rather volatile due to expectations of monetary policy tightening. Let's discuss these burning issues on InstaForex TV channel. Market participants were hardly surprised by a new sharp rise in consumer prices. The latest report revealed that inflation hit the highest level in 4 decades. Nevertheless, market sentiment turned sour. The Fed had been widely criticized for a slow response to the inflation problem. The regulator missed the opportunity to tackle the issue timely. For this reason, it has to resort to an aggressive stance. Some analysts are worried that rate hikes may trigger a recession. On February 14, the central bank held a closed meeting. Even though such meetings take place 3 times a month, this one made investors extremely nervous. Earlier, there were occasions when the regulator changed the parameters of monetary policy between scheduled meetings. For example, it did so to cope with the COVID outbreak. As it turned out, their fears were unjustified. However, the sentiment remains bearish given soaring inflation, rate hikes expectations, and geopolitical tensions. Notably, Joe Biden's administration said that Russia would attack Ukraine on February 16. The Dow may rally in the short term, provided that news about the war between Russia and Ukraine turn out to be fake. Tensions slightly eased after the speech of the Russian foreign minister. He said that Moscow and Washington are ready to return to the negotiating table and find a reasonable solution to the problem. However, the index is still unable to resume a long-term rise due to numerous concerns. The Dow Jones showed a weekly drop of 3%. Analysts exclude recovery for now. On the contrary, the index may go lower. It's projected to trade in the range of 34,200 to 35,000 points. The S&P 500 is also facing bearish pressure. The index may even tumble to a low of 4,290. For some time, it's likely to stay in the range of 4,360 to 4,500. The lower limit of the range is gradually expanding. Last week, the S&P 500 lost 3.5%. Investors are now cautious given the expectations of the war, so they are unwilling to buy stocks, reducing their share in their portfolios. The same applies to government bonds. The heavy tech NASDAQ is also trading within the downtrend. Bulls are unable to take control due to all macroeconomic and geopolitical news. However, traders should be prepared for any scenario. This is why let's discuss the possibility of an award reversal. Currently, there are at least 2 scenarios. According to the first one, speculators should wait for a deeper correction and upward signals. It may take several weeks. The second one implies a sharp recovery of the quotes to 15,000. Bears will be forced to close short positions to offset losses. It will strengthen the upward movement. Currently, short positions are more favorable. Besides, the price rebound to 15,000 is unlikely to happen soon. Therefore, the index is projected to remain in the range of 13,500 to 14,200. The NASDAQ shed 4% last week. Many experts reckon that there will be no war between Russia and Ukraine. On February 20, the Olympics in China will end, as well as Russia's military maneuvers in Belarus. After that, the US stock market may finally revive. Subscribe to our channel and keep abreast of the latest market news. You've watched Weekly Financial Review with me, Anna Kasatkina. Feel free to leave your comments and ask your questions. See you back soon.